Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 24th of November, 2024. We're publishing our gold and silver weekly update for the week ending the 22nd of November. Gold and silver exploded this past week, particularly gold, despite the fact there was little economic news to affect their price. It was virtually all geopolitics. And the question now is, do they have even further to rise? Well, to answer that, let's take a look. Now, we apologize in advance that this video will be slightly longer than normal, but there is a lot to cover in the geopolitical field. But before we look at gold and silver, reminder we have a sister channel entitled Finances Do Matter. We shall be changing much about that channel from the 1st of January, and so if you haven't subscribed so far, please do so by following the link in both the description box and comment section below. Let's now get back to the financials. Gold rose a whopping $152 last week, after the previous week's fall of $121, rising from $2,564 to $2,716, having been as high as $2,718 and as low as $2,563, a rise of 6%. Gold spread between high and low was a sizable $155 after the previous week's spread of $151. Last weekend we said gold would trade between $2,500 and $2,650. The reality is that until Wednesday it did trade between these figures, but then surpassed them and held as geopolitical conflict between Russia and Ukraine intensified, more of which we shall cover shortly. In sterling terms, gold rose £137, closing at £2,171, and in euros, gold closed at €2,614, that's up €178. Silver rose just $1.09, surprising bearing in mind what happened to gold, rising from $30.27 to $31.36, having hit a high of $31.71 and a low of $30.27, a rise of 3.6%. The difference between its high and low was $1.44. Last weekend we predicted silver would trade between $29.25 and $31.75, which it did, despite the dramatic rise in gold. In sterling terms, silver closed at £25.09, up £1.04 on the week, and in euros it closed at 30.18 euros, that's up 1.34 euros. The gold to silver ratio rose nearly 2 points, from 84.7 to 1 to 86.6 to 1. Bitcoin is currently standing at $97,600, that's up $6,400 on the week, and up $28,000 or 40% over the past 3 weeks. In spite of the geopolitical tensions and threat of nuclear war, equities were up. What a world we live in today. The Dow Jones closed at 44,296, up 851. The S&P 500 closed at 5,969, up 99. The Nasdaq Composite closed up 323 at 19,003. And the FTSE 100 index closed at 8,262, that's up 199. Oils were higher. Brent crude closed up $4.13 at $75.17, and WTI crude closed up $4.22 at $71.24. It does seem difficult to keep oil prices under $70 for long. Let's see what happens when Trump becomes president next January with his drill baby drill strategy. The dollar index currently stands at 107.55. That's up 0.86 on the week. To think it was only 2 months ago we were seriously looking at the dollar index falling below 100. Last week we said, quote, next week's data is unlikely to be impactful as there is very little being announced within the inflation growth or job spheres. Save any geopolitical disaster. Gold's high for the year is already in, and it may take a good 6 months for it to reach that level again. That said, we are still bullish gold, especially during the Trump presidency term, and so for those who bought recently, as long as you did so for the medium to long term, you will be absolutely fine, unquote. Well, we did have a geopolitical disaster, or at least a quasi one, in that Biden, for the first time, authorized the Ukrainian military to use the system known as ATACMS to help defend its forces in the Kursk region of Russia, effectively allowing Ukraine to strike inside Russia with long-range missiles supplied by the United States. Immediately after this decision had been leaked to the press, a volley of ATACMS missiles were fired by Ukraine into Russia's Bryansk region. Then, on Wednesday, Ukraine launched UK-supplied Storm Shadow missiles at targets in Russia's Kursk region, where Ukrainian troops have seized roughly 600 square kilometers of Russian territory, though it's reported much of this has been regained. Later in the week, Biden added the final element of a ramped-up weapons arsenal to Ukraine by approving the use of anti-personnel landmines. To ramp tensions further, on Tuesday, Putin pushed through changes to Russia's nuclear doctrine, lowering the threshold for the use of nuclear weapons, and the doctrine now says that an attack from a non-nuclear state, if backed by nuclear power, will be treated as a joint assault on Russia. The Kremlin then took its response a step further by deploying a new type of missile, Oreshnik, to strike the Ukrainian city of Dnipro. Putin claimed it travelled at 10 times the speed of sound and that there are no ways of counteracting this weapon. On Thursday, North Korean President Kim Jong-un, one of Trump's friends allegedly, who has deployed troops to fight alongside Russia, and he said, "Never before has the threat of a nuclear war been greater." Now, however seriously or otherwise you may treat these threats, there is no doubt that the markets, especially the gold market, responded significantly, reversing and increasing the trend, even though all other metrics were suggesting a further decline in the gold price. So we are now faced this coming week with two scenarios, which could affect gold in particular and silver secondarily. We have significant economic data and continuing concern about the Ukraine-Russia conflict and any further expansion of aggression to contend with. We said all along that there was around $200 war premium in gold, and most of this diminished when Trump won the presidency, only now to come back with Biden's recent move. So what economic data do we have this coming week? Well, on Tuesday, we have consumer confidence and new home sales figures, together with minutes from the last Fed meeting. Wednesday, a litany of data announcements, including GDP revision for Q3, personal income for October, and most important of all, PCE and core PCE figures for October, in other words, inflation. For interest, the markets are expected year-over-year PCE to rise from 2.1 to 2.3%, and core PCE to rise from 2.7 to 2.8. So where do we forecast gold and silver this coming week? Well, on economic data alone, with inflation marginally rising and the prospect for a rate cut in December falling down to 53% chance, we would expect headwinds for precious metals. However, with the geopolitical outlook still extremely serious, we may have a little further to advance in gold and silver, but please be mindful of this $200 war premium. Observing that gold rallied towards the end of the week to its all-time high, it's not unreasonable to suggest it may follow through early this coming week. We have to be mindful that on Thursday we have Thanksgiving holiday in the United States and no further economic data scheduled on Friday, so traders may very well be tempted to close positions late on Wednesday for a long weekend break, though this isn't guaranteed. We believe geopolitical tensions will still dominate this week, especially after the French foreign minister stated that the Western allies should not put any limits on its support for Ukraine. Also, US Secretary of State Antony Blinken has arrived in Italy before the G7 foreign ministers meeting on Monday to discuss the wars in Ukraine and the Middle East. So this week, we expect gold to trade between $2,650 and $2,800, which if it hits that level will be an all-time high, whereas previously it had reached 2,792. With 2,600 and 2,850 as outliers on both extremes. Silver we expect to trade between $30 and $33, with $29.50 to $33.50 as outliers. What do you think is going to happen? Please share your thoughts in the comments below. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe and press the bell sign. As asked at the beginning of this video, pop on over to Finances Do Matter and subscribe there. And let's look forward to perhaps a less tense week ahead, but a prosperous one nevertheless.